Welcome to this week's Elite webinar. I'm Riz, and we've had quite the eventful week this week as we take a look here. Last week in the S&P 500 on Wednesday, right here. Yep, on the 16th, we had the Fed rate announcement, and this is the first rate cut officially. It finally happened. It seems like we've been talking about it for, I don't know, maybe 2 years now. When is the rate cut going to happen? When is it coming? Is it coming? Is it going to happen? Well, here we are. And we see that we have this rate cut here of 50 basis points occurred on the Wednesday. And guess what happened? Sorry, Wednesday, September 18th. The market effectively went lower that day as Powell cut rates by 50 basis points. A lot of the analysts, economists were all expecting a 25 basis point cut. Even I was expecting a 25 basis point cut, but Powell came ahead and said, "Look, we're gonna play a little bit fast and loose here. We're going to cut 50 basis points, just to kind of make sure that the economy and the economic data doesn't come in as weaker than we'd like." So they went ahead and cut 50 basis points. The market initially didn't like that. And then the next day, it just took off to the races. Was a massive gap up there. Strong break above the 56, 50 area, 56, 65 area of resistance. The previous resistance and break right above the previous all-time highs and continue to remain right there at around 57.02. So right now, that prior resistance level is now a new short-term support. Okay, so as we look here, the market breaking out. This is a clear breakout. Now, will it hold? It seems to. On Friday, we had a pretty indecisive day compared to the prior day before. And then obviously we did have this candle here going low, kind of just dipping back um, below that or right at that resistance support area. Okay. But so far this is looking bullish. The market wants to continue. In my view, this is not uncommon. I can't in good faith say that we're going to continue to see higher and higher. We know that that rate cut finally happened. In reality, so far, the market continues to be overly optimistic. It has been. The moment, it gets a sign of weakness in the macro data, well then, we might not have enough good news to pull it back because the market so far always felt like, hey, look, we always have rate cuts to rely on, rate cuts. And yeah, there are more rate cuts to come more often, more likely as the Fed tries to get to a more neutral rate area, which is about, benchmark rates around 3%, 3.5%. That's ideally where it's kind of wanting to get to. Well, right now we're at 50 basis points lower. I think what is that, 4.5 to 4.75, if I'm not mistaken, is the benchmark rate. So it's been quite the interesting week, and it finally happened. Something we've been talking about for a long time. Um, Flipping back here to the sectors year to date, take a look at that. Oof, big continuation in utilities, right? Classic as expected. We're going to see utilities and, type of companies continue to push forward and up as the market, prices in the fact that there's been rate cuts and you have less, let's say, risk-free return. Okay, so we have consumer communications, we have financials all outperforming uh, the S&P 500, which now up about 20.5% almost. Okay, with tech, surprisingly, obviously still a great year, up 18, nearly 19%, but slightly underperforming the S&P 500 with the other sectors. We got real estate, energy, healthcare, and consumer discretionary all kind of coming in a little bit lower. I'm trying to see where consumer staples is. XLP, XLC, yeah, it's hiding somewhere. Where the fuck is consumer staples? Let's see if we can add that here. It's not on there. There we go. Okay, so XLP, here we are. XLP outperforming uh healthcare and real estate and discretionary. Okay, so XLP is consumer staples. All right, so quite a bit of a turnaround for some of these sectors as we continue into the end of Q3. Can you believe it? End of Q3. All right. Now we flip back to the oil chart here and take a look at that recovery this week in oil. We saw that come right back up to that 70, 71 area. Again, this continues to remain uh, resistance for now. Okay, the 70, 71 area continues to be resistance. As we move on to gold, once again, gold continues to rocket. The market is giving us mixed signals. Still, we have oil going lower and kind of, in a big downtrend here, but still holding up around the 70 area. We have gold continuing to go higher. We have rates come down, officially the 50 basis point rate cut. And we have, a bit of a dichotomy here where the market's thinking, well, is it bullish? Is it bearish? Is the economy going to have a soft landing? Is it going to be a hard landing? It remains to be seen. But here we are. The market very uncertain. And look at that. As we saw the Fed rate cut happen, we saw bond yields actually go slightly up, right? This isn't too much to infer from right now, but they actually went slightly up even after the 50 basis point rate cut. And one would argue the bond yields were already pricing in a cut. We didn't know up until that day, as I said, whether it was going to be 25 basis points or 50 basis points, but it was 50 basis points. Everyone really expected 25 basis points, but hey, look, we got the 50 basis point cut. I think Powell is a little bit of a softie, and pretty weak-willed. If I, just it's kind of suspect as to him cutting this much. I feel it's a bit too um, dovish, if I say so myself. So, and the market's already been pricing in a rate cut. It just got that 50 basis point and it kind of ticked up, which is interesting to see. Then we have another kind of wrench in the works, which is the US dollar. Slightly lower, but still back to the area where it was before the rate cut, right? So we haven't seen the US dollar completely puke or anything like that compared to other major currencies, kind of just back to where it was. Um, so like I said, it's very unprecedented, very confusing, very uncertain. We got the rate cut, so that's one less catalyst, but obviously the market's going to be looking to the future as usual. When is the next cut? How much is it going to be? 25 basis points likely. The market is anticipating another two cuts before the end of the year of 25 basis points each. Okay. Um, Maybe we get it, maybe we don't. Okay. I feel that we're probably going to see at least one more rate cut at least. Okay. Let's flip back here and let's move on to the earnings. So very muted earnings week again. The only two major ones that I'm interested in are Micron, MU, and Costco, right? Everyone's favorite big box retailer. And Costco has been on absolute tear. Um, it's actually trading at quite the premium, in fact, when it comes to revenue and earnings. I would say very, very overvalued, which is not something you really get to say about a retail company, right? It's not a big tech, it's not a semiconductor, it's not AI based. So quite the surprise there. But those are the two I'm keeping an eye on. Next, events. Pretty weak event based, from a catalyst economic data standpoint. We had the big one obviously last week with the Fed announcement and Powell speaking. But the first thing really kind of on deck here is on Thursday, September 26th, we have durable goods orders, GDP growth rate quarter over the quarter is going to tell us the Q2 final GDP growth rate. Okay, so this is the final number. Remember, there are some revisions, but let's see, it might get revised higher, right? That's what the market's thinking. Powell's doing some kind of speech or talk just before market open on Thursday as well. That'll be interesting. And then on Friday, we have, personal income, core PCE, and personal spending. Neither are too big on my radar. Okay, so flipping back here to the S&P 500, once again, interesting times ahead as we get closer and closer to the election, as we round out the Q3 and go into Q4 of 2024, which is insane to me. And, before we know it, in another 3, 4 weeks, we will be back into another earnings season. Can you believe that? Holy, that's crazy, right? But hey, this is life. Time seems to be moving at a rapid pace. Um, with that said, if you guys have any questions quickly, I'd love to touch on them. If not, it'll be a quick, brief recap webinar, and we can all get back to the rest of our night and evening. All right, so I'll give it a couple minutes here just to see if anyone has questions, anything else, and then we will wrap it up. But so far, so good in terms of market obviously moving up, going ahead. So if anyone who's invested, whether they have a 401k, their passive investments, these are all should be doing pretty good. Um, we've seen a lot of rotation out of tech into other um, sectors. So a lot of sectors have come up, right? Like I said, a lot of sectors have come back up. So the market's moving up as a whole, not just because of tech and communication sector, which was the case for most of the year, right? The other sectors have caught up and come back up, and that's why you could really say that the market is actually a little bit more stronger and more bolstered based on that. Okay. So I don't see any questions coming in. With that said, thank you for joining. Fantastic, year we've had so far, specifically me when it comes to my trading performance. Been a pretty low risk year for me so far, barring a couple trades and obviously the risky shorts, which are obviously not low risk, but you know, very limited from a size standpoint, and holding period standpoint. So overall, fantastic year. I'm up about nearly 40% year to date at the time of this webinar. And I've also showed video recording of my performance right from the Interactive Brokers app. So no smoke and mirrors, no skullduggery, no funny business, just pure, honest transparency for you guys. So with that said, don't forget to please like, comment, subscribe here. All right. Thank you for watching, and we'll catch you on the next one. Ciao.